the United States isn't offering many lessons these days. But economically, when you look at the latest numbers coming out from the World Bank, the U.S. 2020-21 looks a hell of a lot more robust and resilient than the EU or the UK or, of course, Japan or Canada. I mean, you're the economist here. Tell us, where you think the league tables look right now and why.
It's important not to confuse growth rates with levels here. So it is true that the US economy is bouncing back at a remarkable rate. What we're doing, though, is achieving the not slight achievement of returning to the trend we were on before, even going slightly above it. So the United States is now growing back towards the trend level that you would have expected before 2019. That is the achievement of economic policy in the US right now, not to have permanently slumped below that trend, which is what we saw after 2008-9. Compared to the Europeans, this is a remarkable achievement. Europe is not expected to attain its pre-2020 level of GDP, let alone the trend of, as it were, it hypothetically should have been, until the end of this year or beginning of next. It has not fundamentally changed the balance in the sense that China rebounded much more rapidly and using the familiar formula of heavy industrial investment is powering ahead. So the gap between China and the United States, despite America's impressive growth rates right now, will continue to widen because China is not just clawing its way back to where it should have been. It's actually powering ahead on that growth trend to levels we've not seen before. The worries about China's growth are, of course, real and will continue to be real. And they did go back to the old playbook of heavy investment. And we're seeing that in their demand for iron ore, in their demand for steel, for coal right now. But that is, I think, the fundamental continuity. Where the real hit is going to come, the world-changing hit, is in the situation of the emerging markets, and particularly Latin America, because the emerging markets came through 2008-9 relatively well. Latin America leading that charge because it was a commodity-driven boom with China sustaining their growth. Latin America right now, still in the midst of a terrible pandemic there, is looking at a lost decade.
It does feel, while the United States is now powering ahead, that the developing world is further and further behind, not the globalization story that we were hoping for.
I think that's right. And as far as the US is concerned, you would hope that all eyes really are on the rest of the Western Hemisphere. This has got to be a matter, I would say, of absolutely urgent concern in Washington. Mexico, our immediate neighbor, coming through the crisis, very hard hit. In fact, one of the big beneficiaries of America's stimulus is Mexico's export sector, but the Mexican economy per se has taken a huge hit. And the other, of course, giant piece of the Latin American puzzle is Brazil, where the crisis has been profound. And how in the hugely polarized politics of Brazil, Bolsonaro's future plays out against an increasingly worrying, I think one has to say, financial backdrop. Brazil, one of the players who in 2020 did a big fiscal action on the scale of an advanced economy, 10% of GDP roughly, also quite progressive as a result of pressure from Congress in Brazil, trickling down, spending down very substantial amounts of cash to the tens of millions of people who scrape by. How any of that can be continued into 21 and 22 should really, I think, be a fundamental concern of American policy. That's the crisis that's closest to home for the US.
These are countries that don't have anywhere near the level of vaccine access. They don't have anywhere near the level of capability of funding continued shutdowns and disruptions to their economy. If you want to play that out, Africa would seem to be where you'd have an even bigger problem from that perspective. What is the mechanism that you see out there over the coming years? If Latin America is losing a decade, how does it get addressed? What happens? This is not just a job for the IMF.
Well, this, I think, is the challenge which the G7 began to lay out with what they call the B3W, Build Back Better World campaign, which is supposed to be the West's answer, Japan, Europe, the United States answer to One Belt, One Road. And that is where a policy should be, I think one should say squarely. Whether or not there will be a policy there is really the big question of the moment, and whether it will be scaled to the adequate scale. To be in this game seriously, you need to be talking trillions of dollars. That does seem like crazy numbers, But if you think about the development needs with the extraordinary demographic surge running through sub-Saharan Africa now, or you think about the development needs of the poor parts of Latin America, those are just, that's the opening bid to get seriously in this game. And the question is how that kind of funding is mobilized. The talk, of course, immediately then turns to financial engineering, various types of complex leverage mechanism where maybe a couple of $100 million from the Europeans, the Japanese and the Americans leverage out to be trillions of dollars from the private sector. But that agenda has been on the books since 2015. This is the billions into trillions agenda of the World Bank. It has not gathered the momentum that we would expect and we urgently need. And we are still a long way away from, I think, in the West being ready to really mobilize to the scale that will be necessary to address those problems.